As we look around the developed world, the US has come out of its recession much better than the Eurozone, UK or Japan. And so we think on a medium-term view that housing is recovering in America, that the labour market is slowly but surely improving as well. There are concerns around the fiscal cliff and whether fiscal policies tighten too quickly in the near term, but our base case scenario is that the US will continue to grow at a stronger pace than the rest of the developed world. We think the latest moves from the ECB in terms of being prepared to buy government bonds if countries ask for help and if then play by the rules, we think that is a very positive and material step and the most important policy response we've seen in this crisis so far. So we're very encouraged by that. However, it doesn't solve the crisis in its entirety because we're still reliant on governments to take the decision to ask for help and then to impose austerity, which is difficult in a context of weak GDP and high unemployment. So we think it's a positive step, but we're not completely out of the woods on Europe yet. A key challenge for investors today is that interest rates are extremely low in the developed world and bond yields are very, very low as well. So for the traditional sources of income, those investors are struggling from that point of view. So we would highlight within fixed income a number of areas, selected emerging markets. So we like government bonds issued by the likes of Qatar, Mexico, Malaysia. And we also think that corporate bonds will do slightly better with a slightly higher yield than government bonds or cash, although returns won't be quite as high as they have been in the last 2 or 3 years. I think increasingly investors who want income have to be prepared to look at equities and high-yielding stocks. We wouldn't advocate a broad brush approach. We'd look more towards companies with sound balance sheets, don't have too cyclical earnings, and therefore those dividends are more sustainable over the medium term. As we look around the world, the better investment opportunities are going to come from equities over the medium term and selected emerging markets. The caveat to that would be I think emerging market performance is going to be more divergent on a country-by-country basis looking ahead. But generally we think equities are going to be the asset class of choice for the medium term. But investors have to be patient because at any given period there are problems in the world and the global economy, and equities can go through weak periods, but over the long run we think they're going to deliver better returns than fixed income assets.